Alright traders, welcome back to Mouteki.com. It is Wednesday, May 12th. Sitting here just around 8 a.m. Eastern Standard Time. Up on the trading block for today is the New Zealand Japanese yen. We can see the 1 hour compression on my chart where I like to always begin my analysis. Unless of course we have a 4 hour. But here on the 1 hour New Zealand yen, we're seeing a very similar setup to the opportunity that arose yesterday on the euro yen and the pound yen. I personally took the euro yen, did not have a fall through on that trade, although I did see temporary profit of around 40 pips or so. I did get stopped on that position with about 1.5% loss on my account, but no big problem. Going to look today here on the New Zealand yen is for an opportunity to trade this market north. Okay, we're seeing here short-term violation of a line of supply here in the market that has been filled. We will go ahead and show how this market here has fulfilled itself. And furthermore, what we're looking at is a smaller opportunity in here to get our trade entry currently on the 1 hour compression for a completion payment of this overall 1 hour movement that we have not yet seen fulfill the 161.8 fib expansion up above. Let's go ahead and start off with the overall picture, taking it one at a time. So the point is that we're looking here to go north, but what we're looking at overall is this larger movement in the 1 hour compression. We can see here the clear initial movement, the pullback, and in the yellow you can see the fib expansion being the 61.8 fib expansion. We had a retracement. We did not have the market achieve on the 100%, but we saw a retracement once again and then completion of the 100%, a pullback in this market, and then a 127.2 perfect fib expansion payout. And from here we have seen a movement south. Now remember, what we have left up above here is a nice 161.8 fib expansion, okay, and that's going to be our profit target. And what we're seeing here is a retracement of this movement, taking my start point to my finish point, and you can see in blue the retracement levels. And notice how this is coming perfectly off of a 382 retracement level, as you can see being highlighted once again right there at the point on the chart. So what we've seen is the line of demand creating this uptrend be violated by the market, and we can see here a movement that has been created. But when we further analyze this, and let's just go ahead down to the 30-minute chart so we can have a better picture of what's going on. Okay, remember what we want to do is take our fib expansions of this movement and we want to line them up with areas that the market respected. We can see here at the 161.8 the market achieved lowers below that. Okay, and now we can see our next movement. When we apply our lines of fib expansions, what we can see here is a nice healthy initial movement, a retracement, 61.8 respect, there's a 61.8 in black, a retracement once again, 100% respect, a retracement once again, 127.2 respect, retracement, 127.2 double test, pullback in the market, and then the completion here, the 161.8. And notice the reversal here at the 161.8. And why can we anticipate this reversal? Is because we can see that this market is driving above the line of supply. Demand, bingo, is now in our market. At this point, what we're interested in taking this market long here for a follow through, and what we're using here is our smaller compression. In this example, we can use a 15-minute chart and look to prove this smaller movement overall in this setup that is currently occurring on the pair. Okay, so this is the 15-minute compression. What we're looking here is our 382 retracement. We have an initial movement in here. We see retracement. We see 61.8 fib expansion respect. We see retracement. We see the market take out the 161.8. We're seeing a pullback, and now we're seeing continuation. So what this is telling me here is that we're looking at an overall larger movement. And that larger movement that we're looking at is overall the first movement here that we just proved has been a sequence of the fib expansions. So we're looking for the retracement, and now we set up our new expansions from the levels in the market that we have taken, being the start point and the top, and we have now set up our new levels of fib expansions that we're going to trade here during this New York session. And you can see those currently being highlighted all the way from the 61.8 up to the 161.8. Notice how this market is currently resting here at the 61.8 fib expansion. A great area for retracements to occur are at fib expansion levels. So at this level that the current market is trading at, what do you think we'll look for? And that is a retracement. And we can see if we take this down to the 5-minute, here at the New York fake out time, what we're seeing is the perfect setup once again occur, and that is a retracement coming off of a fib expansion level. So now what I do to trade this market is I apply my retracements to this small movement on the 15-minute chart. Okay, let's make them a color. that really sticks out, just because we will be looking to trade these. So what we've just created is our 23.6, our 382, our 50%, and our 61.8. Now the way that you can manage your trade here is these are definitely opportunities that you're going to look to get into, okay? And what you would want to do is manage this throughout the trading day and look for areas of the current movements, fib expansions to be paid out, being all up above the 100%, 127.2 and 161.8. And furthermore, you can take this as a long-term opportunity here and target the completion payment of the 161.8 of the initial 1 hour movement that is showing respect here, also of the fib expansions, as you can see, looking for the complete 161.8 fib expansion payout. So that's what we have here at Mouteki.com for today's New York trading session. Use this material wisely in your trading decisions, and you should see some pips in your trading account. With that said, folks, have a good morning here, good luck, and happy trading.